Don't laugh.
Who laughed?
Okay, that's enough. I heard a snort, and I couldn't keep doing what I was doing, whatever it was we were doing.
I'm not sure, but
I think the
everyone
term
saw this.
entertainment
You
is
can
being
rewind and
loosely
saw why people were laughing.
loosely used. That's right. And we just lost everybody. All right.
Look what I can do.
That's right. Click. What's next? I'm Darren with Arbitrage Trade, and this is After the Bell, and it is After the Bell on Wednesday. So take that into consideration. Anything we say from this point on is that it happened on Wednesday. And my guests are on your right is Daniel Hopwood, top right. And he is an ex-institutional wealth manager from someone I really love. I love that company so much. And then we have Josh Morgan, a.k.a. JP Morgan, a.k.a. the banker, who's waving, and he's down in the bottom left. And then bottom right, that leaves our boss, our guru. His name is Royce Wells, and the inventor of indicators and algorithms for arbitrage and pips. Maybe we'll have a plush out there soon you can buy.
Right, merch. We can make merch.
That's right. Merch.
We got swag, as they say.
Yes,
already.
that's right.
We should totally do that.
So who am I? I am Darren. I am in my parents' basement. I am dumb money. I am an ape, a dumb ape, and I throw poo at people who don't agree with me. So let's go on to the disclosure. When none of us are financial advisors, and this is not financial advice, the information provided is solely for informational and educational purposes, and
sometimes
just take it however you want. That's right. Yeah. Please always consult an investment professional before making any financial decisions, or just let an algorithm do it for you. And we can tell you about that at arbitragetrade.com. All right, so segments. We're going to talk about the tail of the tape. This is an agenda that kind of just grew, especially today, because a lot of things happened today. And rather than me say it, I want the millennial to say it. What the first part that we're going to talk about is what it's titled. So Daniel, what is it titled?
We are so not back.
He even added a so. He added a so not back. Thank you for that addition.
All right. Think of the Spider-Man movie. I'm back. My back.
I mean, at this rate, who knows? Next week we could be back again.
We are so not back. To be determined. Let's see, can we have 2 weeks in a row of this title, just like we did 2 weeks in a row of the last title of We Are So Back? Okay, so what happened? What happened, Daniel? You can start us off. Why are you saying that we are so not back?
I mean, was it yesterday the S&P dropped almost 3%, not quite, a little over 2.5% from its recent highs, and all the other indices were down. And looked into it a little bit, and it appears that September historically is the worst month of the year. And that aligned pretty well with it starting to be September.
Yeah.
So we're kind of just fitting our standard narrative.
Oh, so it's just a narrative. It's just an algorithm that we do every year. It has nothing to do with anything else other than just it's the robots. Is that what you're saying?
Nah.
That appears to be part of it. That's what they're telling us. That's what they're saying in my WhatsApp group.
Well, your bubble, I mean, no. The Dow was down today. That all happened yesterday. This is Wednesday. Today, it was it couldn't make up its mind. It's basically in a wait-and-see mode, I think. The Dow was just a little bit up, and the S&P and the NASDAQ were just a little bit down. And pretty much we have a Friday unemployment report, which I think is what everybody's waiting for, because supposedly that is what the Fed is now putting all their balls into, I guess, is what we'll say. And eggs. Thank you. They're both sort of round. I don't know. Moving right on. Different channel. Different channel. Another thing that happened today is the yield curve, or actually it happened within the last 24 hours, I should say. It basically or what would you say? I guess the term is uninverted state.
Uninverted. It did not uninvert yet, but it's very close.
Yeah, I thought it did actually cross over and then went back down again. I don't know. It's in that almost to the what they call normal state for the 2-year and the 10-year, and we'll see if that sticks going through to Friday. Um, Anything to say about that, Royce? As far as if you want to approach the camera from your
Never.
seat way back there,
I like the background.
we
You're
do
fired.
too. We do too.
On
All right,
air,
Royce.
you're
Royce will
fired.
be doing the rest of the program. I'll see.
All right.
So
All
I
right.
mean, yield curve getting back to quote normal. I mean, there's some history behind this happening before. What might be happening now? Do you think?
Well, from my perspective, or
Mhm.
basically historically, when it inverts, that usually means we're going into a recession. So the fact that it's trying to normalize itself, that means we may be coming out of a recession that no one talked about. And can we go out? How do you get out of a recession that no one talks about? Just keep throwing money at it. If you keep throwing money at it, basically things start working just like with World War II. Basically, how we got out of the Great Depression, they started throwing money at it. They put people to work. They've got things that basically, if you can basically outproduce, raise your GDP, and basically push really hard, you can get out of a recession. So maybe that's what the Fed was doing. Maybe that's why they haven't done any cuts so far this year. They've been pushing really hard to get there.
Yeah,
Business
to have
as
an
usual.
excuse to get there. Yeah, that's
Yeah.
right. The UK actually did come. Or they're saying they're coming out of a recession. They actually admitted they had one, and so it'll be interesting to see as far as dominoes either being pushed back up or falling down. Either way, so I do think historically though that there has been it's a lag effect, right? That when it actually things go into recession after it reinverts. Is that Daniel? Didn't
three
you
to
say
six
something about that?
months.
3 to 6 months after. So everything seems
Mhm.
to be. I mean, it's like last year they said that recession might be in 2024. And then all year this year they're saying 2025. After the election, everything, then everything will get there. Well, there are some reports that are showing that. I mean, if you look at that bank term fund lending program that happened, it hits its peak, which was supposed to be only 25 billion, by the way, for these banks that used it. But it actually went all the way up to um, 125 billion or some crazy number like
Oh,
that.
so 5 times in the allotment. Good to know.
Way. It's I think it's even more than that, but it went way over, and that actually comes due because everything is due a year later from when they actually took the loan. That comes due. The big top part of it uh, becomes due January 2025. Imagine that.
Yeah.
So, and of
Not
course, it
saying
did
that
end.
2008 started in January, but yeah.
Yeah. Oh, did it really?
Yep, January the 8th of
Wow.
2008.
The more things change, the more things stay the same. All right. Speaking of bankers, since this is your property, what are we talking about there, J.P. Morgan?
Oh no, I mean I was going to mention that yield curve, but you're really I think
Yeah.
it's just from a from a perspective standpoint, from what people are hearing and just the reaction to what have happened so far. I mean, you got coming back off the Nvidia situation, and then you've got it was the first of the month on September, and Septembers are typically really bad, and you add that all into the noise and everything that's going on with the emergence, kind of what we've been saying the past couple of weeks, is we're seeing a little bit more of the emergence of that hard landing again, not so much the soft landing that we thought we were going to get. Now kind of the numbers have shifted a little bit with some of the different job reports and economic slowing and all the
manufacturing,
news and noise that we've been hearing, and just kind of a perfect storm of crap that happened on Tuesday. And yeah, things took a turn for the worse, but even more interesting is that we did not really see that strong bounce that we did like off the big dip back in August. So that to me seems to be a little bit more telling.
Yeah.
see that.
Timing and what reports are coming out. Maybe they're saving it for that. Who knows? We don't know until they actually do it, till they pull the levers, till the algos actually do their thing. So the other thing that came out this week was Warren Buffett. He speaking of the entire stock market, he gives the warning that be ready for any stock to go down half, basically. So that for him to say that's of course we all know that when it becomes news, it's to manipulate something that has already happened usually. So it'll be interesting to see what that means coming up. If he's telling the truth, and that maybe because he owns so much of stuff, he's going to take it down 50%, like he seems to be doing now with Bank of America. He keeps taking Bank of America shares and selling the crap out of them.
That an Apple.
Yeah, which kind of tells you something there too. And we'll talk about this later, but he's jacking up what he's investing in some energy stocks. It's weird.
Oh yeah, absolutely.
More for an energy source that's not really proven yet. But anyway, anything else on this that you guys want to throw in there? I think we kind of talked it to death. Let's go on to, we just talked about it dropping 50%. I don't think NVIDIA has, but it might be on the way there.
Remember I said $58 when you see it.
That would be more than half from when you said it, for sure.
$58. Come on.
Royce said it here. Yes, he did. Go back and look at past
58
episodes.
and the cryptocurrency bubble.
and their earnings just weren't as spectacular, if I can use that word, as they still were, quote, good, but they weren't, NVIDIA, when you're at that high of a value, you better start being spectacular on all your earning reports. And that just didn't happen. Plus, there's a big, I guess that whole industry now is starting to be questioned. Imagine that. When we started talking about how it was overvalued for so long, we've said that here, that it's just overpumped. And now they're admitting, oh, well, yeah, it probably, the values are a little strong. And so it's still the 7 that's holding up the stock market. But now they're trying to say that it's going to move into the 493. And I'm sorry, I just still don't see it. It's still being held up by those 7, because they'll take it down and they'll start putting it into the other stocks, and then they'll move it right back into, when they start getting in trouble, they'll move it right back into those 7. So it'll be interesting to see. Did you have anything else you want to say about NVIDIA, though? We do talk about it every week. Anything else about NVIDIA besides the fact you said it was going to happen? And it may be on its way to happening? Yeah.
Oh, no. Well, looking at AMD chips and Intel chips as well. Basically, like I said, the charts are telling, and right now charts are saying that basically everyone and those, at least in that sector, are currently going down. So we'll see. Yeah. We'll see if it holds up.
Well, I think, Dan, you said something about it's just. And the way I see it is there's got to be a bang for the buck on AI, right? We can broaden this out to just AI. It's a concept, but it's not really returning money yet. And people aren't actually putting monetization, I guess is the word I should use. The end monetization part is people are now saying, wait a minute, let's just show me the money. We put all this money into building it out, but now we want to see how company X in general is going to monetize this and bring money back into the company so that we can justify all the money that we've spent getting to that point. So isn't that where we are now? Just show me the money.
I think other than a firm, I can't think I'm aware of any large company has fully implemented AI and seen a large difference in their, bottom line, whether that's them generating more revenue or saving more money. But, I think, I forget what the exact numbers are, but a firm's fired 20% of their company because they're, replaced with AI, which is even if it's just customer service roles and whatnot, that's pretty insane and impressive from an implementation standpoint. And, I think they're, a company I'm sure you guys have seen, all the Meta platforms have integrated AI. I'm not really sure what that does for my Instagram, but it'll probably, help them, better service ads and generate revenue in the future. Especially, after they've started to rebound after that iOS update. So yeah, I think, there's insane spend on these chips. And very little real world implication for the average company so far. So probably, we're probably 5 years early.
Oh, something else that's out there in the future, but we'll go ahead and pump the stock market up. Now, and then once it actually happens, we'll pump it up again, right? I think that's the way it works.
I mean, think about it.
Everything works.
Well, you had the .com bubble of the 2000s, and it took 15 years for anything truly relevant to like kind of come out of Web 2.0, depending on how you look at it.
It's amazing what they come up with in those brainstorming sessions, right? What we're going to talk about here,
I feel like Josh's comments, I saw a lot of head shakes.
Well, no, I mean, I just think like, yeah, I mean, I get it, but and I know this is no phrase, but looking outside of the charts, like there are a couple of things that came out of the NVIDIA earnings that were troubling that not really the catchy headlines. And some of it is, NVIDIA has been up 3,000% over the past 5 years. That's absolutely stupid growth. That $3 trillion valuation. Yeah. I mean, you've seen all that, but they blew expectations out of the water, but they've been ramping up so rapidly that this is the first time we've seen kind of a little bit of a slowdown. Then you've got people on the conference call talking about how like there's Blackwell, delays in the Blackwell. There's like supply chain issues, and they can't produce they can't meet demands. And if you think about that, it's kind of a paradox because they are actually buying, or they're major consumers of these AI chips are the same companies that are also trying to produce their own chips in-house. Like they're trying to create their own silicon. And so if they can't get what they need from NVIDIA, it's only going to accelerate the rate that they're going to need to rely on their own chips. So it's just going to push that and advance that further faster. And I think that's kind of one of the things that, the subtext from a lot of people's reaction to that NVIDIA, the downturn that happened yesterday and today, really.
Yeah, and you throw in now the Department of Justice is now looking into NVIDIA and them encouraging people to not look and seek for other chips, and however they did that. So that's what they're looking into to see if they were steering people just to their product, sort of like Google's thing, just use us for search. They're kind of now looking at NVIDIA in a similar way of saying just use our chips. However it is that they did that, that's what they're investigating right now. So we'll see. It could be just time that the algorithm is supposed to take the price down. So we'll throw in this DOJ investigation to make sure it gets there, right? Which is first, the news or the algorithm? But we talk about that over and over again here. I will bring that up again.
Yes.
Yeah, I will. Let's move on to Ford. Just every week. Ford. So the title here is Ford went woke, then broke, but will it make it back? So what we're talking about here is it DEI that you're talking about?
Yep.
All right, Daniel, you want to talk a little bit about that? And
try not to get us canceled.
Sorry?
I said try not to get us canceled.
Yeah.
I mean, hey, I'm just reporting the headline, let's be honest. And I actually did a little looking into this, like from like more a data standpoint. Is kind of interesting. But so on, I think it was last Wednesday, Ford came out with a memo saying they're going to have a fresh look at their DEI program. And they're pretty much cutting them along with all similar programs. They currently rank on a human rights index and, take stances on, kind of touching the political third rail. And they're going to kind of stop doing all that after a lot of, blowback they've had. And we've seen this year alone, pretty big name companies, but in my opinion, not all too surprising in the category they sit of pulling out of their DEI initiative. Tractor Supply Co., John Deere, Harley, Lowe's have all dropped their DEI programs as well. And, I titled this Ford went woke then broke because there's a saying, go broke or go woke, go broke. But when you look into the actual data of a lot of the companies that go woke and go broke, there's no like direct statistical correlation to them. It's like there's some that have a pop initially and then go lower. There's some that go lower and then go up. But a lot of the companies haven't seen like, all the ones that have a DEI program or something along those lines have all plummeted since then. But I did find it interesting that so many companies are kind of pulling out of this initiative, and I wanted to flip it to you guys: is why are these companies so bad at implementing these things? Because none of these are like bad things, I don't think anyone would say, but obviously they kind of always end up like affecting these companies, get super political. You think of Disney, Bud Light kind of thing, it goes really bad. But flip side, Google is a very, we'll say, progressive company, and they've done really well. So I'd love to hear your guys' take.
Well, I've done a little bit before I pass it on, and I'll do an interception here, but I've done a little bit of looking into it ever since the new Green Deal from AOC was brought out. So I've had a lot of time to look at all of this, because that stands for diversity, inclusion, is the E, environment, or equity, right? Diversity, equity, and inclusion.
Diversity, equity, and inclusion. Yeah.
Right. Okay. What's happened is people have to create a whole nother program within their company. And so it's kind of like the government. You have to, let's start something. So let's create a whole nother wing over here that's going to cost us money. And if they don't feel they're getting direct, some of these companies, if they're not getting a direct increase in, or let's say increase in their investment, return on investment, then they're just saying, well, we were doing this and this and this as a company before. Let's just make sure we do it better, I guess, and not have a whole program specific to these steps that have been told that we need to follow, and cost us more money from a personnel standpoint. That's my take on it. I don't think it is political. I think that's what they're trying to do, is not be as political. So, because you have people, anything as you know, if you introduce it anywhere, you're going to have people who like it and who don't like it. And you're gonna have people not want to shop where you are because of this, and you'll have people who want to shop where you are because of this. So it's just a numbers game eventually, and I think that's just what it is. It's just like, let's don't create any more expense to our company, and we will still, and they always say this, we will still look into this diversity, inclusion, and equity. We just won't have to follow specific these 1 through 10 or whatever it is that is trying to be implemented. And you're not following it, and your score is not going to be as good if you don't specifically do these 10 steps.
So
That's my take.
Darren, on the flip side of that, I'll just give like a small anecdote. When I was at Goldman, as kind of like the younger advisor cohort, we were shown a lot of stuff about like ESG products, and like we weren't necessarily like supposed to push them or anything like that, but it was kind of like, hey, like make sure the clients are kind of aware. You're the younger cohort, younger people are going to care about that in the future, blah, blah, blah. And I asked a client one time, I was like, oh, like, do you ever think about like, adding this kind of stuff to your portfolio? And he goes, listen, man, I got bills to pay. He goes, if that stuff has a better return than what I'm currently in, sure, I'm interested, but I haven't seen anything that shows me it's going to have a better return. So I'm not interested. He's like, I got two kids. He's like, I got a lifestyle. He's like, that's what I'm worried about. I was like, yeah, fair enough.
It does tie in, because that's the environmental, right? ESG is the environmental, the green.
Yep.
And you're talking about Ford here, and Ford's already having to deal with the fact that they've been pushed into by 2030 having all of their vehicles, EVs, and there's been a big drawback on that now, and because it costs so much to get to that point. And people just aren't buying it like they wanted them to. Then they tried the hybrid thing. Now they're still trying that to push that. So it's just a matter of, hey, it's supply and demand here in the U.S. at least, and you're not going to have a government that's going to force it, like an agenda, so to speak, that we're all have to be at X by 2030. So that's what I'm talking about with the whole Green New Deal. Yeah, I think the WEF and the Green New Deal are tied very closely together by 2030. That's why you keep seeing end dates of 2030 of things being implemented. You always see that, and that's what Davos every year they come together, and all the corporate CEOs and the leaders of the
I thought that's
world
when
come
that
together.
Mayan calendar ended.
It might be.
I think that's the end of the world.
If we get to 2030,
Yeah, right.
if we get to 2030, it might be the end of my world, because I'll be like, I just give up.
I'll tell you what, depending on what news source you read, it feels like it's coming up.
That's right.
I just want to see the first corporate Congress come out of here, like where companies become big enough to get voting rights like countries.
Yeah, it's not official, but I think it happens.
I was gonna say, I think that's already a thing practically.
I mean,
like I said, whenever they do the meeting in they did the World Economic Forum, when they get together,
mostly
that's
how
when they're
that
voting
works
on
already.
it. Yeah,
Make it official. I mean, make it official.
might as well.
Have you guys seen the meme of like people in Congress when it's like if they dress like NASCAR drivers, and it has them in like a fake NASCAR suit, and it says like Lockheed Martin, Boeing, like BlackRock. It's got like all their sponsors on it. It's hilarious.
They really should. All right, Banker, anything to throw in here before we move on? Give you a chance to throw your ESG.
I mean, it makes sense why they're pushing back. Like it's a lot of what y'all have covered already. But to me, it's kind of like the public opinion on that whole initiative. It's kind of shifted. You're looking at, and especially with those particular companies and that particular consumer base,
right?
That opinion barely existed to begin with. The opinion was coming from outside and up, and so they were kind of forced to do something they didn't want to do in any way. So it makes sense why they're not going to try overly hard to implement these things in a way that might actually work. I mean, and if they're viewing it as fundamentally flawed, then, and their consumer base is viewing it as fundamentally flawed, like they have very little incentive other than, like you said, that list of 10 rules that they have to follow. They're going to follow it and no more. And it makes sense.
Yeah, exactly. Yeah. Like some of your best employees with the attendance policy, right? They're going to follow it right to the edge. Much as they
So the question, is it DEI or DIE?
DEI.
Okay. Whew. I'm like,
DEI.
I'm like, they named something die. That doesn't seem like they want.
I was about to say, I'm like, man, Royce was really looking for the end of the world.
That was the draft before they decided. They changed it from die.
Companies are gonna adopt this and they're gonna die. They're like, wait, we can't have that. Like,
yeah.
I mean, that's how they interpreted it.
Company, put this in it; it'll die.
Honestly, I think it was almost like an experiment. See how far we can push this, because I mean, I could see a link between that being fully run 100%, and then we're not going to fund you for this and this from the government unless you follow these 10. I mean, it gets getting dangerously close to socialism.
Darren, I'm surprised you didn't bring in the conspiracy theory of that it's all made up by BlackRock to sell more products.
Now that's ESG. I mean, they were all over that for sure.
The ESG filter is just the economic filter of DEI for companies of how they get traded, right?
What?
Because
programs.
No. ESG is environmental social good. So like a lot of the things that correlate with DEI all fall into it.
Yeah.
Like I've never seen, maybe I'm wrong, but I've never seen like any DEI like ETFs, right? It's always ESG stuff.
Yeah. I mean, BlackRock is they were really heavy into it. Larry Fink was really heavy into it to where he finally had to say, okay, maybe this isn't such a big deal. I mean, but he's the same guy.
He's into Bitcoin now. So
he did shift. But as far as we know, I haven't looked at every one of his filings, but I'll bet he's still got a ton of money in it. So we'll have to see what happens.
Bitcoin, I hope so.
Yeah. Bitcoin, is it 58 now? Isn't that where we're at? 58-ish?
So. I mean,
don't want to talk about it.
Yeah, he doesn't want to talk about it. He don't want to talk about it possibly going to
58,000. It's looking beautiful over here.
Royce, was it something you said about 40? Didn't you say 40K?
About 40, yeah.
Okay.
Time to buy more.
Buy the dip. You sound like you could work on CNBC. All right. Job reports and rate cuts. Let's move on to that. We kind of touch it. I mean, that's what happens when we roll down this list is some of the stuff we touch ahead of time. But rate cuts, I think I looked up Reuters is saying 325s, or in whatever combination by the end of the year, we will be 0.75 of a cut. As I've said before, I think it doesn't matter. It could be 1, it could be 1.5, but
It
it
will
is not
not
going
do
to.
1.
Or
Yeah,
what?
no, I'm just talking about by the end of the year.
Insane.
Yeah,
One is
250s.
like,
okay.
okay,
That's
this
what I
is a
mean.
hard slam on the brakes.
Yeah, 250s.
That'd be ridiculous.
They've walked back. It was almost a surety that it's going to be 0.5, or at least it was over 50%, and now they're walking that back to 0.25. So I mean, who knows? It's all just it's just another way to, in my quote, jawbone the market. I think until it actually happens.
0.1, just a
Yeah.
0.1.
But my point is, it's not going. It's a lag effect, and it's going to take a while for anything like this to take effect. So they're going to play it. I think they already have. They've already built in all these cuts into the market, so to speak. So maybe that's why we're seeing a move down now, is because they're thinking it's not going to happen as quickly. Don't know, but again, it's a lag effect thing, right, Royce? I mean, you can put in cuts now,
Yeah, and
but it's not going to take effect till
typically-
6 months from now, right? I mean,
Yep. Economists have that's the hardest job for an economist. Typically, when they're making their predictions, basically they take all the data that they can assess, pull it all together, and then when they give you that information is good for about 6 months. And basically, if they're really close, they get really close to the projection. If they're not, then it goes completely sideways, and basically they have to reassess, take more data in, and give the next thing that they can do, right? Because there are always unknowns. So, yeah.
But all the money's
changes.
The action's already been taken in the market before they start selling their wares, so to speak, to people on CNBC. That it's all that stuff's already been put into play for the whatever price cuts they figured was going to happen. And then it's funny because once it does happen, then they go, "Oh, look, we just cut. It may already be worked into the market, but look, we still need you to buy more." So that's just kind of the way it works. It's a double dip, as I've said before. Let's go on to commercial mortgage bonds. That's one of the ones I added into there because, and it's also one of my 3 things, but don't have really a whole lot of time in that 1 minute to talk about it. But I will just kind of give you the details on this one. United Capital's John Devaney says the commercial bond market is in serious trouble. Dramatic pause. Of particular interest are the office spaces, which, I mean, we've talked about that, CRE, I mean, at length for the last, I don't know, since we've been doing this, I think. But, and those are, when we're talking about those, we're talking about hotels, offices, malls. Ever since everybody from the pandemic moved away from these offices or pared down how much office space they had, there's a problem out there, especially in these big cities like Chicago, Denver, LA, San Francisco, Philadelphia, other places that have big, tall buildings. Because those seem to be hit the most. I mean, we moved out of a taller building, and it's about occupancy. And now these guys have borrowed money to fund those buildings, and they're having to sell them for pennies on the dollar. And this reminds me of what happened in China, but now it seems like there's starting to be some evidence. They're finally admitting some evidence about the commercial bond market. So, any comments on that? I mean, it really feels a lot like I've said before, feels like 2008-ish, but in a different way.
Yeah. Want to talk about that?
Yeah, sure.
All right.
Go ahead.
So, a lot of the shifting, like basically, like you said, we moved out of a high-rise building, right? And typically, in commercial real estate, you have like a 3, 5, sometimes even 7-year lease that you're basically in.
Mm-hmm.
And when those leases come due, like for example, I know like AutoZone downtown, the city gave AutoZone a huge discount on the Gold. I think it was Goldman. Goldsmiths was the name of the building. It was Goldsmiths downtown, and they basically gave them a huge tax cut to be down there. But everyone working from home now, basically all of the incentives, like on their balance sheet, it's actually cheaper for them to lease than to actually own the building because it comes from a different money bucket, right? So as these things are coming up, they're like, well, if we don't have the occupancy, why would we do that? And so a lot of them are doing that, which is causing basically the owners of this property to scramble and say, can we make this a high rise? Can we make this apartments? Can we make this something else that will basically be beneficial? If we don't make it something else, then basically we're now on the hook to still pay MLGW and all of the other municipalities, and we don't have revenue coming in. And no one wants that. You don't want vacancies, and especially in commercial real estate.
So they are basically it comes down to the banks versus the occupants, right? I mean, or the owners of the building.
The
And
owners of the buildings versus occupancy. So that basically some people are going to have to get real creative and real soon. But I actually kind of like this scenario because this also pushes us back to, and I'm going to say it, back to the 80s, where most people, like most apartment buildings, were not standalone buildings. They were high rises, right? And so basically we shifted away from that. So we might be going back. That may be a way to lower the rent because basically now you have all this extra supply available. You don't have to live in a slum. You can live in a high rise.
So basically that what's creating this is the bonds are becoming due, right? I mean, it's and they need to pay up. So the people who own these buildings either need to say, hey, here's the keys. Good luck.
Yeah, that won't happen.
Or they need to pay. Well, I'm hearing that too, though. It's like, hey, I just, if I'm not going to make, they're getting 10%, basically of what they actually put into it. It's like, it's just not worth it here.
And then Blackstone shows up and says, I'll take the keys.
100%. Yes. And then I will charge how much rent for each and every, we'll convert it into apartments and charge how much rent. Condos. I mean, the Miami condos are having a problem with that down there. I mean, it's people can't afford to live there because of the, what's the fees? The extra fees?
HOA.
Yes. They're getting just priced out of it down there.
More than anything in the world.
Yeah. Right. And it's always, like I said, it's coming down to, quote, wealthy elites and banks, and somebody's got to have their money. Somebody's got to pay. So that's what we're getting, is closer and closer to that popcorn and Coke, and watch the elites battle each other in the ring. That's when it gets
my money's on the bank.
Exactly. Bank slash Fed slash Treasury. They're all a team.
They can afford to buy it. They may not want it, but they can afford to buy it, and they can find someone who will finance it. So
we find money for everything. So let's move on to oil. What's going on with oil? It is down to 68 and some change now.
Election. Oh, sorry.
You think? You've been reading my notes. It's exactly what I said.
Times are good. Times are good. Look how cheap this gas is.
They've been saying for a year or maybe more that it's the China economy and the demand is not there. Whatever. I mean, it's more to it than just that. And then they try to say, well, people are going to EVs, so not as much gas is needed. No, that's not it either. Then now the one today.
Wait. Let's entertain that. Why not? Why can't the EV make a dent in the price?
Because it's not making a dent in sales. There's not enough out there that's happening yet. That's going to really make that dent.
I mean, I've seen at least 7 or 8 Tesla trucks here in the city.
Okay.
Yeah. How many other types of trucks though?
Okay.
And how many people made fun of them along the way?
I'll let you guys decide.
I saw a bright purple Barney colored Tesla truck.
Dude, there's like a baby blue one down here.
I would take one. And in fact, that sports car looked really hot. I would take one of those Sportsters.
Oh, the Roadster.
Oh, the Roadster.
Roadster, yeah. That's it. Sportster's a Porsche, right? I don't know.
You had an extra 150
it's
grand.
not like I've been shopping for them or anything. So didn't have my name right.
I shop for private jets in my free time too.
That's right.
Gulfstream 550. If anyone wants to sponsor us,
one big enough for all my friends and family.
Hey,
we'll put the sponsors on the side of the plane, just like Congress should have on their coats. Yes, all right.
Just don't put a target on it.
Yeah,
bought by Pips.
Pips will be on the tail wing. Yeah, that'd be cool.
We should do that.
So the other thing they're saying now is just because it's seasonal. It's the end of the driving season, so that's just why the demand.
End of the driving season, going into the holidays. Oh yeah, that makes sense. Hold on.
The summer vacation season, because all the elites took vacations. I see it on my Facebook timeline. Don't get upset. But yeah, the bottom thing and the last thing I said was it's about elections. I mean, because in the next debates, they can say, look how far we brought gas down. We don't forget that you spent the last 3.5, 5 years, whatever it is, with gas prices up to here. We hope you forget that, because look at the price now.
Yep. I filled up 3 days ago for $2.38 a gallon. $2.38 a gallon.
Did you use Kroger?
Yeah.
Yep.
No. It was the Quick Wick or whatever the thing right here in Germantown. That might be Kroger. I'm not sure.
That's how I got it.
I don't believe you.
That's how I got it, though. I got that price too.
Picture.
It was through Kroger, though. It got 30 cents more per gallon down by using the Kroger card or Kroger ID, whatever it is. Yeah. So 268, 270, somewhere around there. The other thing I threw in here real quick, because you guys know I love to throw these things in here. 3 mega banks had loans outstanding of $1.832 trillion to giant hedge funds as of March 31st. Okay, JP Morgan. These massive loans were given to, as the article said, dodgy giant hedge funds that are regularly found to be on the wrong side of the law and or engaging in wildly risky behavior. And then it goes on to, and it tries to tie these two together, but they won't list which hedge funds these are. But then they go on to say,
no one wants their name on that. Hello.
No. Then the article goes on to say, oh, by the way, prime broker operations of Goldman Sachs, Morgan Stanley, and JP Morgan were each servicing more than 1,000 hedge funds as of 2022. They try to tie them together. I'm not saying that's the case. I'm just saying that they threw that in there to let you imply that they're part of this 1.832 trillion that they're funding. And the only problem I'm saying with this is it's risky stuff that it's being used. It's stuff that'll come out later, that we'll find out later after the impact happens. That's a lot of money. So we'll have to see, because if you look at I know it's a drop in the bucket, especially
drop in the bucket. Look at our deficit. We're good.
I was going there. Absolutely. we can give out money here and there. Let's just take care of this too.
I mean, and it's not that it's a drop in the bucket. It's that this exact same or similar, maybe just in different variations, has been going on with banks since like 98. There was a big one in 98, right?
Yep.
I don't remember the details of that. And then you got Credit Suisse that was doing something very similar, but they were a smaller outfit and got way over leveraged, and they got upside down. And
Archegos comes to mind,
right? And they bid it. But think about how many times. I mean, like, not to throw my own name under the bus, but like JP Morgan has had like 5 various federal criminal indictments, and they've had literally nothing. The drop in the bucket is the fine, or what's going to happen to these entities if they continue to do this, because they're just going to get bailed out, or they're just going to get bought out.
Well, I'm seeing more and more articles that are admitting that bank term fund lending program that I mentioned earlier was the reverse bailout of the banks. It basically sent money from there to the banks, and then those banks put it into the markets, and which pumped up the 401ks and the pensions. And so then Janet Yellen got her wish through that way. I mean, I'm just saying, it's my opinion. It's not a fact. But if you're good at dot to dots, you might do the same. I
just want to draw one correlation that people may not have drawn.
Yes.
I think a 401k is literally a millennial. It's only 40 years old. It is a millennial.
It's true.
The pension plan, the tried and true, the company taking care of the people, that's been around for hundreds of years. You get this 401k nonsense out there that also lets these giant brokerages take advantage, use all their money, and what do you get out of it? You get to basically get maybe retire at 75 if you're lucky. Yeah,
you can hear them talk about it too. The guys that come on to these financial programs, and they say, yeah, they're not going to get wealthy, but they're going to have enough to have a nice life to retire and just be happy.
And just be happy.
The crumbs.
I put money on. I bet no millennial or very few millennials are depending on their 401ks to basically for their retirement. Right? Exactly.
If they haven't already taken the money out. Beige Book, let's talk about that. That released today. So basically what it said, and this is where you said something earlier about the soft landing thesis, Royce.
No, that was Josh.
That was Josh. Okay.
Yeah, soft
I heard
landing, hard
soft landing.
landing.
That's true.
Yeah.
Which, like I said at one point, they were trying to
We
make
look
it no
alike,
landing. Yeah. So anyway, this Beige Book actually came out, and now it's kind of going against the narratives that are trying to be pushed out there, all before the jobs report on Friday, the unemployment report. But it said that 9 out of 12 districts are showing downturns in economic activity, and that economic activity overall between all 12 is flat to slightly down. So again, the narrative that's been pushed has been flipped now from this one report, or it's like business as usual, which we've heard for the last X amount of years, is the numbers just don't match. The numbers don't math, right?
They don't math.
So anything on that, Daniel? Any comments on that at all? It's just another report.
No, nothing.
Yeah,
nothing crazy.
Okay, it's kind of new. It'll be interesting to see what the reaction is, I guess, tomorrow through Friday. But again, I think it's just going to be Friday.
Yeah.
But I think we talked about this, Royce, that major market moves don't usually happen on Friday, right? I mean, they don't like to do that.
Friday, Black Swan, what? Nah, I don't know.
Oh, okay, something happened. So if it does, it's to cool off over the weekend, right?
I would love nothing more than the market to crash, not this Friday, but next Friday.
Oh,
do you know why?
Actually, that's a possibility.
Do you know why?
Is it because it's after we get paid?
No, that is Friday, but it's the 13th.
Okay.
The planners might be that devious to do that.
I was expecting this to be a little bit more.
Who expect bad luck on Friday the 13th? Look at this market. Oh,
and it'll go down 66.6%, right?
Yeah, absolutely.
And then it'll go up 420 on the next Monday, so we can all get over it.
And then down 69.
13% correction.
Yeah, there you go.
Yeah.
We sound like Elon Musk right now. Those are his favorites. All right, let's go. Let's end this thing, man. Let's go to let's go to the crayons, because I'm not sure what it is you're going to tell us today here. Let's go to our little after the bell crayons and charts.
Right,
I don't have.
Let's take a look at.
Now let's move.
I am playing with Costco.
I love that place.
Wholesale, because hey, when you got to buy in bulk, right? You got to buy in bulk.
Mr. Bulky.
And I have my one of my newest indicators out here, Arbitrage SAR, that was added to Atlas 18 Pro, and basically those are the dots that you see on your screen.
Royce.
Yes.
What does SAR stand for?
Stop and reverse.
And
the stopping, and then you're going to change direction and go the other direction, right? So what Atlas is, it tells us where to take profit, and then basically we see these little red dots start to appear, letting us know that a downtrend is in fact starting. And likewise underneath, basically we see where there's support and there's resistance. I'm talking about Costco this week because one of the reasons is, like, typically when things start to turn down, one of the indicators that things are slowing is basically people are no longer buying as much, or buying in bulk. And typically Sam's, Walmart, Costco, places like that, Bargain Hunt, whatever, the giant wholesale bulk places, they start to slow down. So seeing that basically about 5 or 6 days ago, Costco actually reached this plateau, almost 920. And since then, it has given back about 3 to 4% from its all-time, maybe not all-time highs, but most recent highs. I want to see where this guy is going longer term. One of the things that I'm trying to look out for, and we're trying to keep an eye out for, I'm going to basically show our support and resistance lines, and I want to see where my daily, my weekly, and all that show up. I'm going to probably have to go to light mode because I did this for dark, so I'm going to go light and basically, hopefully I didn't blind you guys. those black line that you see there, these are all very, very key points for Costco to hold. And if it can't hold, basically bad things start to happen. So on the daily time frame, we are watching this support line at about 854. That's about, once again, about a 4 or 5% from where we currently are. And if it actually breaks under that, we have roughly 783. Looking at our dashboard indicator, in order for the buy trend to continue on, looks like it wants to touch that 848 and possibly 797. So there should be some type of support around there. So as this trend develops, we'll keep an eye out and basically see if we can potentially buy the dip on Costco, and if basically that yield curve is in fact inverting and basically going back to normal, maybe you'll be able to pick up some shares of Costco in the very near future, or maybe they'll split. Who knows? That's all I got for you guys.
Yeah, I would definitely have to split several times for me to be able to afford one share.
Just get one. All you need is
There
one.
you go.
Just need one.
Or I'll do what the partial shares that everybody loves to offer.
Oh, Robinhood. Let's go.
Exactly, our favorite. And then they probably count it as one share. All the partials are counted as one each. All right, so
that would be smart.
And put into tokenization. All right, that's a whole nother show. So let's talk about the winner, if we must.
Yes.
Of the first.
Go out with a bang, come back with a bang.
We are in season 2 now.
This was more
Temptation Island. No, I mean season 2 of the wagers that we do. And so we're starting all fresh. Hopefully we will have Daniel more often this season, and that he won't just make
my money's on Daniel
appearance every now and then. So it was back to 0-0-0, right? And Royce was the last winner.
Yes.
So he got to pick the stock this week.
And then you guys tried to hamstring me. But you know,
just be a gracious winner.
Yes, Karma's a nice lady.
So here's your new scoreboard, and as you will see, and I'm showing them scoreboard, you will see Royce is the only one that has made a mark so far now this season. That means that he won. We were, what was it? First Solar? Is that what it was?
Yeah, first Solar. Yep.
Okay. And I had, we'll go over it. Daniel had under or over 238. I had 230 to 238, basically. The banker had 222 to 230. And Guru Quanticus, which is what I'm calling him, I had 222 and under. And it ended up what? I don't know, 215-ish, 16-ish?
215.40, yeah.
So, I mean, I gave up on that, didn't even look at it for most of the week after that first move. It would say, well, I'm done. Stick it in. I am done.
So I got a nice alert Friday saying that basically it was time to sell, and I was like, yes.
See, the guy puts alerts on it. This specific wager stock.
Your ass got so
but it's nice to know when it's coming.
Of course, he said he's going to go undefeated because of his secret weapon, so we'll have to see. So, what is your stock now for next week? Let's go to okay. That's First Solar you have up there now. Are you wanting to talk about this now?
Right now
and rub it in? Is that what you're trying to do? What are you doing here?
See those dots? That first red dot that was Friday afternoon. I was like, oh yeah, come on, baby.
So you're talking about SAR again?
All right. Yes, just SAR. Yes, I'm loving that indicator.
That made you feel comfortable though that you were going to be right, because of.
I'm not giving any information this time because
I show the charts.
I said which way I thought it was going, or it may be going, and then basically I got last. So I learned, I learned.
You get to decide who goes first.
So we're doing Alta this week, because if it's good enough for Buffett, why not us, right?
I was going to say, did he call you and tell you to do this?
Absolutely. See that proud sponsor.
Remember, he's the one that said. Remember, he said any stock could go down 50%. Is that why you're doing this? What is this?
Absolutely. You see that red recycle sign right there, right?
I do. I also see a green arrow.
You see a green arrow. You see some red dots.
And I see earnings. not too long ago. So I mean,
which way do you guys think you want to go? I'm going to let Daniel go first because.
Oh, jeez.
Oh, not wait. You got to give a channel.
I don't know. Should I? This one has a very nice channel because it's huge, like huge.
Give me like the 30 and the 15 minute.
Yeah, 30 and 15 minute.
Because you're on arbitrage band, right?
$10 range. So, yeah. So we're looking at. You want me to go down to the 30-minute, Josh?
Yeah, I just want to look at one of them.
All right, let me get rid of the support lines that I drew on there.
Homework.
Yep. Hey, y'all not supposed to see everything I do over here. Pay no attention to that. All right. And I'm going to use a bigger band because we're on a smaller time frame. All right.
This is the innards, by the way, people that are watching, of pips.
Yep. This is the belly of the beast. All right. So you got what you want to see over here, Josh?
Boy, he's gonna like.
No, not really. This one's all over the place.
Exactly. There's a lot of sideways going on. There's a lot of sideways.
Give us a top and bottom though. What's the
So
range?
I'm going to say from about 334 to about 374. Let's do that. So there's about a $50 range.
Well, it's 40, but that's tens. Everybody gets a $10 range.
Every time we do this, I keep trying to change your chart.
I'm sorry?
Every time we do this, I keep trying to change, like click on your chart and change it.
No dice. Sorry, sir.
We are not there. The technology is not there.
Oh, we can. Oh, wait. No.
Pull up any desk. Pull up any desk.
Oh, wow.
Control
There's
his
a
computer.
ghost.
No, it's
PC
right.
anywhere. No.
You said Daniel's first, right?
Oh, yeah. Daniel gets first.
So give me a range of 10.
34,
I want from the current price up, I guess, what, $10 again?
Okay.
No, you're in the middle of a range. You have to be 34 to 44, 44 to 54, 54 to 64, and 64 to 74.
Right. So what's the price right now?
It's at 59.
Okay,
so basically, he'd be from 54 to 64. Is that what you're wanting, Daniel?
No, I want like
64 to 70.
No, I want 59 to.
No, you can't have 59.
69.
Nope.
You don't have fours. All off the fours.
He just wants 69 there somewhere. So, because he's a millennial. So, are you going to take 54, 64?
54 to 64
what is
or
it?
64 to 74?
Hold on, there are way too many numbers. This is hard for me to follow.
Okay. So, really? Oh, that's why he's an institutional guy. I said nothing.
He's like, just let the algorithm decide it for me. I don't want to decide it.
No, he has to call his buddies and say, buy this now, guys. Buy this.
Oh, whatever the first upper range is.
The first upper range, so that's 64 to 74.
Well, 64 and up, basically. So.
Yep.
All right.
Well, no, that's the top of the range, right?
Oh, yes, that's the top of the range.
No, I want whatever the first range is from the current price.
So what we've been saying for 10 minutes is 54 to 64.
Yeah, 54 to 64.
Sure, I'll do that. No, but I mean, that's the middle range. That's not what I'm trying to say. But
no. So like the under that, Daniel, we would have 44 to basically 54 to 44, and then 44 to 34.
Yep.
They said it was at 59 though.
Yeah, I know, but that's in the middle of a range.
Oh, I guess my point is, why wouldn't you just start where the price is and then it's split into quarters after, right?
It's his game. It's his rules.
Hey, all I'm doing is going by probability.
See, this is why he's only one.
For everyone to get the same amount, you have to basically split it evenly across what's problem.
That's fine. I'll take the middle range.
Well,
There are two in the middle.
There's two middles.
The one I already agreed to. All
right, 54 to 64. All right. That's where he's at.
Confirmation? Yep. Okay.
Yeah.
Who do you have next?
All right. I'm going to take the one right above his. So I'm going to take 64 up.
64 plus. All right. Since I had the next least amount of wins. Actually, it's your
What?
choice. It's your choice, though, Royce.
All right, Josh. Yes, this is revenge.
Man,
Josh.
dang.
Well, you already took my range, so
Mine too, by the way. Go ahead.
I mean, there's
How
no way.
much-
I guess
Let's
I'll
go
take.
up.
I guess I'll take right under Daniel's range.
So that means
Great.
54 to
44 to 54. Yeah.
Yeah.
And I got
44 to
44 and
54.
below.
Yep.
Yeah,
Yeah.
I don't love it, but it's fine.
Hey, when you win next week, you remember you thank me. You thank me.
Hey, all we need is a macro event, and the apes will win. Because if the market crashes, it'll
Oh, yeah,
take
'cause
everything down with it. So
Because you got to take the upper range, then, right?
Oh yeah, I took the higher range.
yeah. All right. Let's get us back to our little smiling faces so we can all say bye-bye and see you next week. See you guys. You guys can wave bye, or you can do the peace sign like a cool millennial would. All right.